SMF MMT 1203, 57 minutes to the closing bell on 4/26/2011. What we love about what we do is that SMF is an MMT program, market maker, trading in the middle of the public. Amazon's going to report earnings, for crying out loud, and these are the options. We took a look at some 429s. We're looking at some 521s now. Remember, this is live here and now. It's going to be reporting earnings shortly after the close. So what has Amazon done in the quarter? I say that Amazon, according to what I've seen so far in the earnings, which are okay, but are those earnings going to be enough to pile it higher? And what is their, so we take a look at the previous quarter. They did okay. Their numbers aren't going to be bad. It just depends about those profit margins, inventories. How does Amazon, is Amazon going to be affected with high dollar fuel? Yes or no? The other things that we would like to know, which that's what we're doing right now, is training around it live. That's why we're asking the questions, so we can put a plan together here in the after hours market. That's what we're doing. Basically, I'm going to go below the money right here at 94 pennies. And what I'm going to do is I'm going to put this in our list. And this is going to be a, let's go with a 521. So we're up there at 183. Let's take a look at that 170 put. That's 247, it looks like. The 160 put below the handle, we're going to take a look at the premium and see if they have stole premium, inflating the put side of the market to buy it. If they have, then we won't buy it at all. We'll wait for it tomorrow morning. Doesn't matter to us. We don't have to be in it before the earnings because we can trade it short and long and after hours and then worry about this market in the morning. Or we can go and buy this market and make a lot of money on the equity long and short in that after hours trade. Go to stockmarketpending.com. Please just search after hours trading videos. Earnings season. You're going to find the greatest trades ever live that you've ever seen anywhere around the world. Because the truth is being shown right here in the analysis and the trade management that's going to take place. Let us not forget that part of it. It's quite different what we do here versus what you do. We're going to trade the other side of that analyst community, the other side of the public, inside the middle and the price action and after hours. So here is the put options right here. The 190 call up and out of the money. And also, let's just throw in here that the 190 put, in the money, which is in the money, it's 183, so it's in the money put. Let's put that right in here. Bam. There we go. So now we got the call and the put right here. We can see the percentages that they're taking out on a net change percent level here. Change from the open. And then, of course, the last prints on each one are right here, MMTs. So basically, we could say that the $200 call, which we haven't put up there, that's a volatility trade, but they want a lot of money for that. $1.72 is not cheap. You know why? That $200 call, this column right here, up and out of the money, you could gap up $4 or $5 in the morning and they still take out 80 or 90 cents premium. So therefore, based on the last print of that price, $1.70 up and out of the money, that's expensive. So what? We'll wait for tomorrow morning on a lot of these option trades for one reason. Just by me looking at what you can see right here that you've got the 190 call, you've got 4,200 contracts total volume traded today with an open interest of 8,098. We know it. Okay? Now, when we get up here to this call, we've got a 185 call with 6,100 total volume contracts traded. What does that mean? That means that right now that amount of contracts traded is there's a lot of bulls and then there's just a few people selling their contracts ahead of the earnings. But a lot of bulls believe that Amazon goes higher. And that's okay with us. However, when it comes to making a market, it's better to stay clear of the option ahead of the earnings, so that way, based on the prices, and I'm going to show some of the prices right here. Watch. I'm going to go to this 200, Look at the price. The low was $1.37, it's $1.68, $1.69. This is that $200 call up and out of the money. They could drop these bids down to 55 pennies tomorrow. So we'll just stay out of it. We'll take advantage of it. Here, that's up and out of the money. That's expensive. They're inflated in price, so we can't take it. We're going to have to do it tomorrow, unless this thing comes down to $1 or 85 cents by the closing bell, which is only less than an hour away now. So they have a lot to come down, because this is retail to participate. Retail to participate in Amazon. Let's take a look at the 190 call. You can see right here, which is up and out of the money. If you're buying 10 of these, the high was 565. They're a wholesale trade for an intraday. But if I hold this overnight ahead of the earnings, I'm subject to see these come down to 2.60 by 2.90 on the bid and ask on the opening print. And it's a 190 call. They could even only gap it up like $2, but drop the bids here in the morning. So that's why we can't trade this one, MMTs. So we are going to be on monitoring. That's expensive, the 190 call. Here, the other call, the 185, which is slightly above the money. Look at that. 795, 750, 795, 630 by 640. No. They could drop these down. Look at this 185 call here. They could drop this premium down to, let's say, 4.30 by 4.70 in the morning on the opening bell without hardly moving Amazon that much. So that means if Amazon doesn't move a lot at all in after hours, that's part of the case scenario of our trade management. If it doesn't move much, we got to take a look at what they do with the contracts. Now, if they do move it a lot, say they pop it up $10, they're going to raise this up here. That they're going to steal premium on the upside here. So these are going to trade up to about 10.5 to, let's say, 11.20 between the bid and ask on the opening bell tomorrow morning. That's provided that Amazon gaps in after hours off of its earnings now. If it doesn't, well, hey, you can kiss that 185 call goodbye. And let's say they drop it below the strike price on the opening bell and Amazon sells off, they're going to take all the premium out. We'll start a market here, depending if there is a gap down on this call, we could end up buying these $1.25 by $1.75, bid and ask. So there's a lot of risk ahead of the report, is what I'm saying, because if these were really priced the way they should be, well, then we could participate like we always have. Remember, as being an expert in the option pit market maker pricing model system that we have created, we can understand when there is inflated price action in the current price level. Let's just understand that. So the more that comes clear to us, the more risk management diverse we can get by waiting on the sideline as far as the smaller MMT accounts. The bigger MMT accounts, they can trade it because they're going to make lots of money on the name and after hours. So we've gone through some of these strike prices. I will show one more that could be of interest for 521. That's going to be this line right here. And we're going to take a look. That's 1,300 contracts are traded down here by $1. And 75 cents was the low, but part of the problem with little movement, they could set the bar on these at 10 by 25 cents in the morning, even on the 160 put. That's even with the stock dropping $2.50. But they just, what the gimmick is, MMTs, is on the opening bell, they walk away from the bid, they walk away from the ask, and before it even opens, they've set those prices right there in the little boxes, and that's how premium is being sold. So MMTs, option management remains that some of these can be bought, but there's a premium to it. And for the risk management entry, it's better to wait for the day after for the smaller accounts. Bigger accounts can get them. There's going to be lots of action traded in after hours. You hear me? Lots of it. It's a 520. It's a put option. Here's what Amazon is trading at right here. Let's look at the last print. Now, we only have a short time left. It's 3 minutes. It'll be 15 after. And we got 45 minutes to the close. This is a special preview on the options long side, short side, calls and puts, strike prices, pricing control mechanism down here in this market. This market we're experts in, and so we are with the equity and how they work together. in price action. Mathematically, we're never wrong to the price. If you think we are, come and visit us for 5 days and see the truth for yourself. This is how we measure our risk. We'll take advantage of this market tomorrow. We'll take advantage of the name and after hours. I'll see you there live.